Okay, welcome everyone. We'll start our lesson. A couple of you maybe know me. My name is Anjum Sattar. I'm working with the University last 10 years, and I'm also teaching at University of Bradford. I had to do some work for Leeds, and I'm ACCA qualified. I did MA in International Business Management, MBA, then MA in International Business Management, MSc in Marketing, PGC. So I work in logistics. I currently am doing part-time, side by side, business in accounting and finance. So we have a small practice. We have a few clients, and we are offering services. Okay, so I work also in marketing. I used to be area sales manager for British Gas, and before I used to work in logistics. That's all about me, and I'm teaching last 15 years and taught various levels, ACCA, CMA, CMI qualification, MBA, MSc, BSc in accounting and finance, and of course IFA and various other qualifications. So that's all about me. Please, if you don't mind, quickly introduce me, where you're from, keeping in view of GDPR. If you're working in industry, it's good to share, please, what we can do. We can embed the example from your background. That's and we can learn from each other as well. Yes, please. Who's going to introduce me quick first, please? What's your name, where you from, what you done, please, if keeping in view of GDPR, whatever you like to share. Yes, please.
Hello.
Hello.
I am Viorica. I do work in accounting firm. You probably remember me. We've done law for accounting.
Oh, yes, I remember.
Yeah.
Nice to see you again. Welcome.
Thank you. I'm based in Reading.
Oh, brilliant. Great. So how's weather there? Here in Leeds is at the moment is sunny, but it's changing.
I know.
So how's your end? Is it nice sunny today, or is it?
No, it was raining. It's a bit sunny now, but it was raining in the morning.
Okay, great. Hope so will be better on weekend. We cannot we can just assume weather is changing so rapidly. Okay, thank you. Thanks for sharing. Who's next, please?
Hello, my name is Pradeepan Kandasamy. I already joined in the with me last session, I think in the taxation session.
Yes, welcome back. Welcome to this unit as well. Yes.
Yeah, that's all. Only I have to complete 2 subjects in this IFA. That's all.
Oh, great. Good to
Yeah.
know. So it's a matter of few weeks, huh? So welcome. Thanks for joining.
Thank you.
Yes. Who else there, please?
Hello, sir. How are you doing? This is Saman.
Welcome, Saman. Are you okay? How are you keeping?
I'm fine. Thank you so much. Thank you for today's lesson. Thank you.
Okay, so I think so you know each other as well?
No, unfortunately, I haven't met the other student yet.
So if you don't mind to introduce yourself, please, so that knows as well.
Sure. My name is Salman, and I also work in a small accountancy firm in Manchester. I had a master in accounting and a degree in accounting, and now I'm doing the IFA. I've got five more modules to complete.
Okay, great. Well done. Thanks for joining and thanks for sharing. And let's, we'll start.
Thank you.
Anyone else there? No, I think so. We are only 2 people today. Yes, welcome. Oh, yes, welcome. Yes, please, if you don't mind to introduce me, please. Who else there? We can introduce each other, please. Okay, we'll start. Welcome. Thanks for joining. Okay, anyone, any question before starting, please? If you have, very welcome. Okay, all we have access on Moodle.
Yes.
Okay, great. So we'll start. Okay, so please, all the handouts, all the resources available on Moodle, and in next few weeks, we are going to set a separate channel for just IFA, where further books, and we'll share that channel link with you as well. Okay, for time being is available resources, all these which we'll use, and I'll recommend, extra resources. We'll carry on embedding those. Of course, is a written assignment there, no external exam. You have, it's a matter of, meeting the learning outcome and preparing assignment and submit accordingly. We'll start. First of all, we'll go through assignment specification, what we're supposed to do and what we're supposed to learn. Okay, so welcome. So we'll discuss about the unit specification first. Okay, thank you. Thanks for sharing, Navarit. Okay, this is unit 6, and the aim of this unit to provide learner with the understanding about the concept of assurance, and the learner will consider the responsibility of different stakeholders when completing the assurance, and will gain understanding about the internal control and importance of assurance engagement. Assurance engagement is very, very crucial too, because the financial statement should be true and fair. It should provide the information that should be true and fair and meet the every stakeholders really, and they can make the decision based on the information on. Under IAS 1 International Accounting Standard 1, you learn about the financial statement, how many types of financial statement we prepare, what sort of information they provide, and the financial statement need to be true and fair. And auditors give the assurance about these financial statement is meet the legal requirement and provide the true and all the material information there. Okay, so understand the concept of assurance. Define, we have a assessment criteria. Define the term of assurance. Describe the concept of reasonable assurance. Explain the assurance process. Compare and contrast the responsibility of different stakeholders involved in an assurance engagement. And M, which is a merit criteria, we learn about how we can analyze the possible purposes and outcome are obtained, from different assurance engagement, and we assess, the needs of the plan of assurance activities with the professional skepticism and professional judgment, which is very important in any giving assurance. So that will be our learning outcome 1, which we'll go through. Then next lesson we'll go through learning outcome 2, which is about understand the nature and importance of internal control. Learning outcome 3, which we'll go through in lesson 3, understand how to gather the evidence with completing the assurance engagement. And the learning outcome 4, which we'll go through about ethics and assurance and engagement. And the key indicative contents, every learning outcome, overall our discussion will address, all the key points. Define the concept of assurance, user of the insurance, reports, assurance principle, assurance technique, assurance process, assurance engagement, risk, scope of planning assurance engagement, completing assurance engagement, evidence sourcing. All these will be in our discussion, and record keeping why is important under the assurance. Okay, so that will be all. Please, you can ask any question during our delivery, and we'll start with how much we know assurance, scale 1 to 10. So always good to be reflect yourself. You can write how much I know already about assurance. I've been involved in audit, and please, you've been given the assignment brief there, sample assignments there, We have all the relevant resources and the books and articles are there. So it's good to please, we can look around these. I included here integrated workbook. That's quite good to be. Yes, some of course audit standards and accounting standard always carry on changing. We carry on updating these resources, but if you think anything need to be further, please let us know, which we can. But that's the normally we use these resources. I'll give you further journal articles about assurance, and I'll upload the latest version of assurance and the books as well. Okay, welcome. We'll start. Okay, so first our learning outcome about understand the concept of assurance and why is important, and as we mentioned, the aim of the unit, and always good to scale 1 to 10 what current knowledge about assurance. So please, it's good to reflect at the end of the lesson. You can reflect as well, and we'll carry on getting the concept really, and then we can, in our whatever we learn, that knowledge we can apply in our assignment, and we can pick the example from various source. So one of the source please, is quite good too. We can set up absolutely free account. It's called Open Tuition. Yes, couple of you already mentioned, I discussed with you in the other unit as well, other subject, audit assurance. Okay, so here please the booklet, and I will share with you. If you want, please, in your time, you can download and all the key resources is available there. But I already shared with you the Kaplan resources, which is available on our Moodle page as well. And plus, I'll upload VPP, Kaplan, and OSPO resources for you as well. Okay. So this is quite good. What is assurance, corporate governance, audit assurance, auditor report, opinion, risk? So all will be in our discussion. So quite good, the booklet, very to the point, not not a lot of example, but give you good abstract of the things, with few examples. So it's good to follow. You can. Okay, we'll start. Anyone, any question, please? If you have, you can carry on asking. Welcome. Thanks for joining. Okay, 1.1, define the term assurance. So we can look around what is meant by assurance and why assurance is. Okay, couple of, because these slides is being embedded from various source, and sometimes few things you will and we further relate to in our discussion. And please, you can add your own experience as well. All you working in accounts, you have experience, you in practice, you study accounts and finance and assurance audit subject as well. So an assurance engagement is the practitioner accountant express the conclusion or design to enhance the degree of the confidence of the intended user. So assurance will enhance the confidence of the intended user. So we can think about the user of the financial statement, what sort of decision they make. It should be enhance their confidence level, and they can make the decisions accordingly. So auditors can be practitioner, internal user, intended user can be owner and the shareholders, and responsible parties, the managers, and the financial statement give the financial information and the criteria, accounting standard, and the legal requirement meeting, and accordingly, and then auditors can give the assurance. Reasonable assurance is a high level of assurance, but not absolute. So auditor never give the absolute assurance, because nothing is came in our notice 100%. No, we never give. We can say based on the facts and figures those were provided, and I can give the assurance that these financial statements prepared in line with the certain rules and the Finance Company Act and the other accounting standard. That can be assurance. So limited assurance is a low level of assurance than the reasonable assurance, which is stated in the negatively. So, and the auditors can never give the absolute assurance, because the inherent limitation of audit, because we do sampling, we're not looking every transaction. So based on our examples, based on our sampling, we can say is the financial statement true and fair. Inherent limitation is a subjective judgment by the director. Director may not give all the information to a detail, and possibility the fraud has been concealed, and the sampling and the evidence and persuasive, not conclusive. That's, we have a problem. So we know about Enron. Have we heard about Enron? And we know about Enron. Are we aware of Enron? Yes, please. Can you hear me okay? Enron, do we know about Enron?
Yes.
Okay, it's good to be, the 3 hours movie on Enron as well available. So it's good to on YouTube or various other channels. So it's good to watch, assurance. Yeah. So an engagement in which, the practitioner express the conclusion and design to enhance the degree of the confidence, as we mentioned earlier. So what is the assurance engagement? Reasonable assurance, secretary audit, we can look around, free from material misstatement. Materiality is one of all the significant information should be included in the book of accounts. Limited assurance and review engagement, and we need to be true and fair. Increase the confidence, yes, and knowing the risk of the information being incorrect is reduced. We want to make sure that we give the true, and risk will be minimized if the information is true and fair. So there are the 5 elements of insurance engagement. 3 parties involved: the practitioner, we said a details, intended user, the responsible parties, because a director normally is not the owner of the company, because especially public limited company, they are the agent of the shareholder. They have to work in the best interest of the shareholder. Reliability and true and fair information should provide and meet the expectation of other stakeholders as well. So sufficient, appropriate, evidence, substantial, that's we need to be assurance. We need to be make sure reduce the risk of and all the possible information we should, and increase the confidence of the user. Okay, so let's look, the example of buying a house. Consider someone who is buying a house, and most of the member of the public, yes, we can look around the technical expertise to access the structural condition. There is therefore the risk that someone pay a large sum of the money to purchase the structurally unsafe property, which is need to be further expenditures to make it usable. That's, to reduce the risk. Normal, for the house buyer, what we can do, we can look around the surveyor, and the surveyor can do the structural assessment. If the surveyor can fill the report and say nothing is scam, so that's, we need to be at the document not being, and on the basis of I give you the assurance. We can never give the absolute assurance, but based on the facts and figures can give the assurance. Structural deficiencies, again, the suitable structural criteria, which information is the potential buyer can make the decision, buy or not buy, and the confidence they know the structural condition of the house is. So that is very crucial. User of the assurance report, both internal and external. Internal within the company, external outside. The assurance report is a tangible output with the assurance engagement. In this report, which is quite useful to look around internal use and external use. That's, is quite, so that's why internal and external audit we can look around, and we can look around the how much is the trust we have, confident we are, and based on the evidence obtained during the engagement, practitioner conclude that whether assurance is objective has been met. That's, objective of the assurance. Is it positive, absolute, reasonable, or limited assurance? The title of the assurance report delivered according with the applicable assurance standard. That's, again, we can look around in terms of the audit standard as well, accounting standard. So engagement may be referred to be the client, and we can look around the assurance report, draw the attention to the address, see the basis of the practitioner work. Okay, that's we have 1.1. 1.2 is the concept of reasonable assurance and type of assurance. According to international audit standard, international accounting standard board, International framework of assurance engagement permit two types of assurance engagement, reasonable and limited, which we just earlier mentioned. Reasonable assurance engagement is the responsible assurance engagement. Practitioner gather all the sufficient appropriate information, should provide all the material aspect with identify the criteria and positively word it. So limited assurance engagement, which we can look around, the user incorrectly believe that the audit does provide the absolute assurance. No, expectation gap, what we have, that's, like we have a trillion construction company, more than 10 million shortfall in the pension fund. So that shouldn't be provided, and we need to be always need to be look around. There is a misconception, can be believed that detailed 100% transaction and the balances are tested on the sample basis. No, it's very difficult. Require detect the fraud. Of course, we do the sampling, and opinion are drawn. These are, free from the material misstatement caused by the fraud, and the auditors are the responsible preparing the financial statement. This is the responsibility of management. So we can give the assurance based on the information whatever being provided, because we can't really do every transaction check it there. Sufficient appropriate, evidence to be able to draw the limited conclusion which we can look around, respect of identifying suitable criteria, which we need to be look around, circumstances and negative word assurance opinion, that's also which we need to be look around. Example of the limited assurance, let's, please we look, can you hope you can see the slides appropriately? If not, please let me know. So which we can limited assurance, the company who is legally required to be full audit, to have to review their financial statements. We need to be look around, especially public limited companies, turnover, and those are big companies, their financial account must be audited and submitted, because the money is from, and the assurance report is designed to gather the inspired by not unlimited, but we give the all the possible information about their future plan, current value of, if anything, we have a lot of, if asset being impaired, it should be the revalued of asset. These, all should be, on the basis of this we can high quality objective review of the financial statement, enable a auditor to state whether the basis of the procedures which don't provide all the evidence required in audit. So whatever we can say, whatever the evidence we ask can be provided, on the basis of this we can give the assurance that the financial statement. We can guidance, we can look around in the law, international standard review engagement, and the engagement review of the financial statement. We can look around type of the review and using much limited procedures and statutory audit the requirements. So we can look around review engagement, voluntary analytical procedures, and make, require in the negative assurance. So that's we look all types of assurance, if positive or reasonable assurance is being given or not. Yeah? That is quite crucial. Okay, so please, anybody any question you can ask? Anyone any question? Yes, no. Okay. No question. Okay, thank you. We'll carry on then. Reasonable assurance is a high level of assurance regarding the material misstatement. Reasonable assurance include understand there is a remote likelihood of the things. Yes, we can achieve the reasonable assurance. The auditor need to obtain the sufficient appropriate evidence that will help, to reduce the audit risk. And if any material misstatement, that's, which we can look around the conducting the audit and the financial statement. High level of objective and detail include obtaining the reasonable assurance whether the client financial statement free from the material misstatement. All the significant materiality concept we can keep in mind. Going concern, the mean the business will carry on as normal for foreseeable future, that can auditor can give the assurance. Reasonable assurance engagement, it can be, we can sufficient appropriate evidence, conclude all material are free from errors and follows accordingly the laws and asset been revalued at the inventory, like inventory values either IS2 International Accounting Standard 2 says inventory should be recorded at cost or net realizable value, whichever is the lower. So we have, review the inventory, then the stock values. In opinion, the financial statement press, yes, fairly and all the material aspects. We can look around different companies and year end, and the report was prepared and the standard was followed. Explain the assurance three parties audit process. Yes, prepare the management directors, shareholders, and auditor. The management prepare the subject matter, and this case, the financial statement, auditor financial statement, perform the procedures as getting the appropriate evidence and the test of control. We need a segregation of duty. We can look around the complete, accurate, cut-off dates, transaction being included, and who is responsible for what. Because we have a IFRS 16 in which is International Financial Reporting 16 about the leases. Because in the past, the assets are not owned by the company and the title is, but we not used to show them, not used to listed, how long the commitment we have, like in term of the operating lease. No, we have to lease, we have to treat as asset, we have to gas, we have to treat as a liability, and then we'll carry on settling those liability as well, settling down, of course, then our asset becoming our, and that's, which we need to be fairly represented through and fair preparation. Okay. As we discussed assurance process, we can look around development assurance engagement in corporation and separation of the ownership and the control. Directors are shareholders are the owner, directors are the agent of the shareholder. They have to work in the best interest of the stakeholders as well, because the stakeholder wealth maximization, not just the shareholders wealth maximization. Thus, we need to be leads to be invest the business control and held, personally responsible, satisfying the remaining corporate debt, creation of the limited companies refer to the incorporation. Those we have, the meeting the company act rules as well, and the legal distinction between the owners and the business, which said shareholders actually owner of the business, and managers separate the business and daily basis is separation and fiduciary relationships steward. So they work in the best interest of their shareholders as well as the other stakeholders. Now we need to be look around. That's the conflict of interest need to be managed, need to review, and the giving the assurance accordingly. That can help. Okay, the stewardship is the responsibility to take care of the resource. You're a steward, the person being trusted to look after the asset, because the shareholder, owner, director are the steward of the shareholder. They have to work in, and their relationship with them between these, we can know a fiduciary relationship, which is accountable. Yes, and we need to be look around these relationship, good faith, such as the between the director of the company and the shareholders of the company, and the separation of the ownership and control. Because if the director have the shares, own it a lot, maybe they work in term of their own interest. We need to look around accountability. People are position, power, segregation, duties, accountability, audit. Yes, not everything control. Good corporate governance, how the company is run and governed. Not really the Barclay Bank being the CEO being paid £2 million bonus when Barclay Bank not on the single penny profit. Audit engagement, we look, the audit objective, look around the general principles. External audit is the most developed countries. Publicly quoted companies required, like we have, KPMGs and Deloitte and various PricewaterhouseCoopers, and these are all the big, audit companies. Those do the external audit, and always good to be. You have the internal, external. We have to look around the ethical principle. Those are given by the awarding body that been delegated to the practice license, and the audit standard. We must need to follow those, and professional skepticism. They recognize that the financial statement is being audited and maybe materiality, which we all in the planning and performing, and not really missing the key or material information, and we can editors can give the view about all these. Okay, so 1.4, compare and contrast the responsibility of different stakeholders. In the stakeholders mean anyone who has any interest, and they are the users of the financial statement, and we need to be give the opinion about the financial statement, and different stakeholders, assurance engagement will need to be information about the company in order to make the decision of the course, which we can look around. Different stakeholders, shareholders, investors, government, even the generation will come after us. We need to be look around their interests like profit, planet, and people, sustainability, internal stakeholders, board of directors, committees. That's we need to be. We should have a KPI, key performance indicators, which we can measure it. We can look around the particular area of concern based on the experience of other companies. We need to be look around the concise, high level of information, depth knowledge of the business, because sometimes auditors, if you don't know the background or don't have you done the audit of these, sometimes it's difficult. So you have a good commercial awareness, then you can do how they do the revalue, where they buy assets and what type of assets, and where they sell the clients and all, the information need to be possible. Primary needs, auditors area of the concern is reports for the personal agendas, possible KPIs, saving, identify the perceived costs and the benefits, and others, may want internal audit support a major project, advisory work can be, and as internal audit always good to be quickly identify the risk, but sometimes it can be conflict, maybe work in same department and people not really giving 100% truth. Possible primary needs is a clean audit with a few findings, pragmatic action, improve the control environment. We can possible KPI, rating the reports, on the recommendation spend. Other factor maybe want internal audit assurance, which we can, and executive on their behalf, use these free resources by borrowing internal auditors to work them. Then sometimes it can be doing various, the company, so their interests need to be protected, which will go through under last learning outcome, which is about ethics and the conflict of interest. So possible primary needs, confirmation, and the management take the control seriously, risk being managed. We have a risk register being, we manage. If we recruiting, what are the processes are in place, those all in a detail, ultimately linked to the financial and the costing to the company. Yes. So regulatory requirement, all the rules being followed, the possible confirmation of the management and the control. We can look around the KPI, spread of the rating across the reports issues. Other factors like, interested accounting report containing trigger the words of breach, non-compliance, these, compliance with the rules, with the banking, with the credit control, and various others, in the law, which we can. If you always good to be work toward the merit criteria, the purpose and the outcome of obtaining different assurance. The assurance engagement is obtained sufficient, appropriate, limited assurance, and we can give with the examples to meet that criteria, which we already mentioned. The assurance engagement, reasonable assurance, limited assurance, statutory audit, free from material misstatement, in true and fair, that can be part of, which we can give with the examples. And review engagement, financial statement is enable the editors to state whether the basis of the procedures which don't provide all the evidence, anything come to editor's attention, cause editor to be believe the financial statement are not prepared according with. So we need to be look around, it need to be prepared according to the new, if it the new standard revaluation of the asset, depreciation, consistencies in policies, inventory evaluation, if you're using first in, first out, last in, first out, FCO, whichever method. Secretary audit is the example of the reasonable assurance in assignment, which we need to be look around company act standard, which we had a discussion earlier as well. Not possible provide absolute assurance. Financial statement of sense, subjective and judgmental matters inherent and limitation can be in some businesses. A representation from the management, because like if you're dealing with the foreign currency hedging and the currency fluctuation can be that type of the, and we need to be look around, and the editors can based on opinion. Okay, persuasive, not conclusive, and not don't review 100% of the transaction. Experience gap, there is a great level of assurance editors provide, reasonable and limited assurance. It's not possible to give the absolute assurance, because the financial information, subjective judgmental methods, inherently limitation can be representation from the management, relies upon the source of the evidence. Evidence often persuasive, not conclusive, 100% in transaction, which is not possible. Expectation gap can be. Okay, then if you want to look around the distinction criteria, assess need and plan the assurance activities and professional skepticism and that. So in the years which we can look around regulatory bodies, standards, financial reporting standard issue, the document, and which we can include some of, to meet. Skepticism is the essential part of the detailed mindset, which we can look around the consider the reasons why attitude and professional. What is the professional skepticism is we can the term control, international audit assurance standard board. We can look around international audit assurance 2000 our, which is one of the standard 200 overall the objective independent editors and conduct of the editors is also really matters. Yes, how many companies with the client relationship and giving the true and fair information, not conflicting, and obtain the more guidance what is meant by skepticism. Professional skepticism are detailed evidence that contradict other audit evidence, obtain information that bring into the question reliability. We can look around the conditions, we can look around the circumstances suggested. Then this is the standard which we can look around and include to meet the professional skepticism closely related to fundamental ethics. Professional skepticism is related to the application of the professional judgment and core application. That's really need to be make sure, and how the details apply the professional. A details is likely to apply the professional skepticism at the various stages, the client acceptance, the various point during the audit process, and some typical example when assessing the engagement. A detail should integrity honesty about the thing. Risk assessment, so clearly identify, discuss the procedures and the risk and the going concern. Obtaining the audit evidence on these, even from third party, to reduce example of the management refuse audit to request, obtain the evidence. That can be it's a issue, and the details have the consider the trust placed on the evidence obtained from the management, and believe that the management and govern honest integrity and the information they are giving is a true and fair. On the basis of this, the details can draw the and give the not contradict information. A detail apply the professional skepticism when forming audit opinion. Ultimately, application of the professional reduce the detection risk of, and we can look around inherent risk, detection risk, and control risk in audit risk. Those we look in the following lesson. Specific application of the, yes, so where we can look around again in your assignment, we can refer back to these standards, yes, and the section of the law to meet the distinction criteria. So it's good please about given IASA 240 emphasis on the importance of assessing the reliability of the information in this standard. Thus we can the information who is came, where this came from, who was the surveyor, and if they did the revaluation of the thing. So accounting estimate is a fair value accounting estimate. Use the significant exemption management developing estimate. What way says we have a going concern, which we actually mentioned the business will carry on, opinion being drawn, and related parties and relationship and consideration of the law, and increasing important in global financial crisis back in 2008 and 12. That's a huge lot of accounting standard, because before that Enron, the scandal and various others that happened throughout the world. So please, I included a few links here for further reading. We have a Kaplan resource, audit and assurance resource published in the article of ACCA on various these issues, and the standard is good to read for the sake of and there are a few extra slides please, which we can look around the professional standard, which we duty of care, negligence, damages, which we look in, we relate to ethics, to when we draw the assurance engagement, and evidence That's how we can collect it, and that will be in our next lesson. We can relate, but before that, you can go through these extra bits, slide that will also help you to for LO2. That's before we finish, we can look around LO2. So if we can before next, our lesson, if you look around the indicative content, and it's good to go through these, few points. So understand the nature and importance of internal control. So I'm sharing with you that book, and within this, you have internal control. So we can look around internal control chapter here. Yes, internal control, accounting system, computerized control, and automated tools and techniques. Those are for internal control, which we can use it, and that's quite good to go through. And I'll share with you this in the chat box as well. Okay, so today all from my end. Anyone, any question, please, if you have? Yes or no, please? Okay, so thanks for joining today. And that's all from my end, and hope I'll speak you all during our next lesson. We'll go through LO2, and here I shared with you the handouts, and that's quite good to look around. And next we'll go through internal controller. And have a good weekend. If you have any question, please you can ask. So today our key focus was audit assurance, and we look around positive, negative, absolute. Auditor never give the absolute assurance. Okay, any question?
No, thank you.
Okay, that's all from my end. Thanks for attending to this session, and hope I will speak you all during our next lesson. Have a wonderful weekend and enjoy weather. Hope so will stay sunny.
Thank you.
Thank you.
You too.
Bye bye.
Thank you. Bye. Bye.
Bye.
Bye bye.
Bye.